Three things you may not know about FHA loans. If you think FHA loans are only for first-time buyers with perfect credit, you're not alone, but you're also you're not alone, but you're also wrong, and those misconceptions might be costing you money. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Today, I want to clear up some common myths about FHA loans. These government-backed mortgages have been around since the 1930s, but I still hear the same misunderstandings from clients every single week. Let me share three facts that might surprise you. First, the FHA isn't actually a lender. The Federal Housing Administration does not make loans. They're part of the Department of Housing and Urban Development, and they act as an insurance company. When you get an FHA loan, you're really getting a loan from a bank or credit union that's insured by the FHA. Why does this matter? Because that insurance policy protects the lender if things go sideways. And when lenders feel protected, they're willing to extend credit to people with lower credit scores and smaller down payments. That insurance is what opens doors for borrowers who might not qualify for conventional financing. Second, FHA loans aren't just for first-time buyers. I had a client last month, repeat home buyer, selling one house and buying another. She assumed FHA was off the table because she'd owned before. That is not true. And I know that I've got it on here somewhere because we already heard it this morning. Yeah, that's just not true. Yes, FHA is popular with first-time buyers because you can put down as little as 3.5%, but repeat buyers should use these loans too. Maybe your credit took a hit during a divorce. Maybe you're rebuilding after a business setback. The FHA program doesn't care if this is your first house or your fifth. The catch, it has to be your primary residence. No investment properties, no vacation homes. Third, there are no income limits or geographic restrictions. Compare that to other programs. The VA loan offers 100% financing, but you need military service. USDA loans offer zero down, but you're limited to designated rural areas and there are income caps. FHA, anyone can apply, any zip code, any income level. That 3.5% down payment can even come as a gift from family, your employer, or a charitable organization. Now, here's where strategic debt management comes in. When I review someone's total financial picture, sometimes an FHA loan makes sense as part of a bigger strategy. Other times, a conventional loan works better. It depends on your household blended interest rate, your unique goals and objectives, and how each option impacts your monthly cash flow. Bottom line, strategy beats rate always. An FHA loan might have a slightly higher interest rate than conventional financing, but if it gets you into a home 3 years earlier, builds equity sooner, and fits your current financial situation better, that's the right strategy. Want to see how an FHA loan compares to your other options? Head to bookrs15.com, bookrs15.com, and let's run the numbers together. Go in and get key steps, rsrlinks.com/keysteps, rsrlinks.com/keysteps, and let's take a look at if you're mortgage ready. We'll look at the total cost, the cash flow impact, and which path makes the most sense for building your wealth. This is Ron Siegel. Thanks for listening to the Mortgage 101 segment brought to you by GetHomeSelect.com, GetHomeSelect.com.